Information presented on Sky News Real Estate is general in nature. Viewers should seek their own professional advice before purchasing products or services. Sky News Real Estate may receive a fee for commercial arrangements with companies featured in this programming. Sky News Real Estate. Smart investing.
Hello and welcome to Smart Investing. I'm Chris Gray. On tonight's show, is capital gains tax payable when you refinance a property and pull out the equity? If you live in the property, does that guarantee you'll never pay capital gains tax? And what are the things a person looking to buy property can do before buying? Well, joining us tonight is Stuart Ward, Director of Bell Partners Accountants, and Charles Tarbey, Chairman and owner of Century 21 Australasia. Welcome to the show, guys. Now, Stuart, one of the first things you need is obviously a bank. Do people, or should people, care what bank that they go to, or are all things the same?
Banks are very much competitive these days, but I mean, they have different products and different availability as far as where they are and online and things like that. So different banks can be very appealing to different people. I would have thought that these days, because they are kind of interrelated, a lot of banks kind of own second-tier ones as well as first-tier ones. So I would have said you'd be shopping around and be more competitive around your banks. And there's loyalty kind of has taken a back seat in regards to banks these days. So I would have thought these days it's important to kind of look at your banks, look at what it does for best for you, look at availability and go with that.
And Charles, the age-old question is bank or broker. Old school is they always feel loyal. Older people feel loyalty to, and that's not why I'm asking the question.
Well, I'm going to answer it that way. You said you predicted what I was going to say. Look, for me, it is a bank. For me, it's a bank because of their long-standing relationships, and they've got all my business, and I send them a report every month, even though they don't ask for it. So they're well aware of what's happening. But when you're an on and off investor or first-time investor, you really should be looking at a broker, because the brokers, in essence, indirectly represent most banks. And they're going to work harder for you to get that loan through because they're competing with other brokers. And I think that's what you want. Competition is really good. Creates an incredibly different desire in people. This is why we're talking about real estate companies that might charge a flat fee. They're not as encouraged to get you a better price or a higher price or get your circumstances more in top of mind for them, because they have to work hard. They don't get paid until they get a result for you.
So that's really the difference between an employee and someone self-employed. They've got to put food on the table. They need to make some sales.
Look, I had a manager work for me who wanted to buy one of my businesses and become a franchisee, and he stopped advertising in a magazine that I'd already advertised in for years, and I rang him up and said, "Oh, you've stopped advertising." He said, "Oh, now that I own the business, I'm watching the expenses." I said, "So what were you doing last month when I owned the business and you were working for me?" And I think that's what happens. He's a hard worker, he's a good guy, but you just have a different mentality when your life is on the line, if I could say that.
Yeah, no, fair enough. Now, Stuart, what's the bank going to put in, and what have you got to come up with?
So usually, I mean, 80-20 as far as is usually the rule. So 80% of it will come from the bank, 20% will come from yourself. There is LMI, it's referred to as mortgage insurance. Mortgage insurance is basically when you go over the 80%, the bank will take insurance over the 10%, for argument's sake, if you go to 90%. Some banks will go to 85% without LMI, but most circumstances 80-20. And you know, we kind of hover around that 80-20 as a kind of a rule to get in, but then the goal obviously is to get that down to 70s and 65s, and then you may go again. It's just kind of a matter of playing the right risk game as far as where you go into.
Can I ask about that? With the mortgage insurance, right, everybody, the majority, not everybody, a lot of people think that it's insurance that has been taken out against a loan for them. No. Right, so it's not
to protect the borrower.
Yeah, to protect the borrower. Yeah. But a lot of people think that it is that. They think, oh yeah, I'm mortgage insurance, I'm protected if something goes wrong, but they're not at all. And so if the bank is protected, why do they still pursue people if there's a debt, if the mortgage insurance is covering the bank? Is that a valid question?
Well, I suppose, I mean, insurance people don't like paying out, I suppose. No, so kind of see the purchase of the person who signed on the dotted line as kind of maybe easier.
Yeah, so the bank's got their money, so now they pursue the borrower.
Well, it just now means that an even bigger authority comes to sue you rather than a smaller bank that may not do it for publicity.
There is a way of rolling mortgage insurance into a loan.
Yeah, quite often they can add it to the loan.
So that you don't have to come, because it is a significant amount of money.
Yeah, but I think if you can get into a loan and you can get in, you've got your 5% deposit, you can get into the market today versus in 2 or 3 years, or even if you've got your 20% deposit and it means you only put down 5, so you've got 15 over for emergencies.
Well, it provides cash
It
flow.
can be smarter,
I mean, like, I was talking to an investor the other day, and we're talking about do we go for, say, a 75% lend or even an 85% lend? And then, but I was saying to them to go for the 85% because the other 10% at this stage, you need that money to keep the loan going for another year until you save up more money to keep it going again, or circumstances may change with your own pay. So therefore, it's easier for you to maintain the loan in, say, year 2 or 3 rather than year 1. So you might keep that cash flow of that 10% for the first year just to get your foot in the market.
Yeah. And effectively, when the banks are assessing you these days, is it just your salary that they're taking into account, or is there other incomes and other tax benefits?
No, they will ask you for all sorts of things. I've seen, like, if you own a place already and you've got share rental, even though it may not be registered somewhere, they may just take that as far as your flatmate paying your rent as well. So they'll take your dividends, your wages, your rents. Those are the obvious ones, and then kind of interest and things like that if you have got money in the bank. But usually you're using that to put against the property. But all income is taken into consideration. Even rent, I mean, they'll take 60% of rent.
Yeah, I was going to say they've changed the proportion.
Yeah, 60%.
So it's not quite the
in
same.
reality, because obviously you've got a mortgage business plus you've got a property management one. In reality, for most properties, how much rent do you actually get? Because I know I've been investing for 20 years. I get 51 weeks or a 52 on average across all my properties.
You get a lot less than you calculate that you're going to get, and it costs you more than you think it's going to. It's the same with everything. Every deal or every business opportunity you go into, every time I look around, I do my budgets, I have a tendency now to add 15 or 20% to the cost.
So do you think it's fair that even if you have got 52 weeks, then the bank cuts you down to 48 or 42 or 75%?
I think it's correct, and I think that's good management. I really do. Yeah.
It helps the purchasers as well. I mean, hopefully the banks are being responsible as far as helping you borrow the right amount of money and making sure you're not going out there in the limb and uneducated. So hopefully the banks are doing their part as well.
Yep, no, fair enough. OK, Charles, let's jump to the numbers and we'll talk a bit more about mortgages after that.
Yeah, if you forget about last week, it was really odd, not much going on. And those properties that did go to auction, not this weekend, just gone the weekend before, I mean, actually had quite high clearance rates, because if people who were going to auction their property on the Easter weekend, they were genuine sellers, they're selling, and so the clearance rates in Sydney going back then hit 77%.
Which is pretty big.
Which is very big, but only a small number of auctions. This week just gone by, the clearance rate across the country was 65.3%. This time last year it was 77.1. So now we're really starting to get a significant difference between the two. And even the individual cities, no cities had anything really outstanding. Sydney came in at 67.1%, and they had 775 auctions. Melbourne was 69.6 with 720 auctions. So all the other capital cities were in the high 50s or early 40s. So nothing magnificent, which is really where everybody's talking. Everybody's saying it's slowed down, it feels different. There's more property, there's less bidders, the vendors are having to come back, not drop their prices, which you might see as happening, but adjust their prices.
Yeah. And again, I guess another thing that they talk about is kind of days on the market, which would make quite a difference, and that would really tell you a fair amount about the market as well.
Yeah, that's what's definitely happening. That is definitely stretching out now.
Yeah. So what's happening with homes advertised for sale?
It's actually really good. I read a report today that said Sydney has got 22% more stock today than it had this time last year. Now, I wasn't sure that report was correct, because when I looked at the overall stats, there's been a 0.36% increase this week over last. But the difference is that we have 7.79% more stock on a national level today than we had this time last year. So those factors are really playing into an opportunity. And I saw a situation, now I've talked about apartments in Brisbane, I've got a bet going with somebody on this, that you'll be able to buy an apartment in Brisbane in the mid-3s to early 4s. And I'm starting to see that pattern happening in some areas too now.
Actually, we used to do some really good bets with CoreLogic, and we used to get, or RP Data, and we used to get a free lunch at Christmas.
Graham
no matter who won.
Yes,
we need to do those again.
Gone off and doing something else, so nobody's betting me anymore.
Anyone that wants to bet with Charles Tarbey, let's put a bet on and Christmas lunch on it.
That'll be a lot of fun.
Residential rent price movements.
Yeah, 1.38% increase. It hasn't been magnificent. When I look at the change, the one we talked about before was Hobart. Hobart was climbing every week. In the last 3 weeks, that's dropped, and that's what we expected. More stock in Hobart, a lot more investors are bought there. The properties are being completed, brand new homes, etc. So they're on the market now, and the rents are going downwards. The interesting one is that the rents in Perth started climbing over the last 3 weeks. So I'm really focused on that particular marketplace.
And then finally, the vacancy rates.
They're very good still, even though Melbourne jumped up a little bit from last week. They were at 0.39% last week, 1.52% for Melbourne. Sydney was 1.64%. Now Perth was just below 9%. It was better this time last week, but it's just started to climb a little bit. But on average, between the three of them, was 3.84% in vacancy rates.
Wonderful. Thanks for all those numbers. Stuart, Charles was mentioning before those numbers, talking about that there's always something else that comes up that takes money out of your pocket. So what are probably some of the abnormal expenses that you should try and budget for?
Well, special levy is always the big one. You know, we don't want to have a special levy ever, but they are necessary. And when you're buying a property, you should always look at the minutes or the building report, if you like, as far as finding out what the sinking fund is, because the sinking fund is basically the bank of the property, and therefore, you know, the higher that is, the less likely you are to have a special levy. I've always encouraged, you know, investors to go to AGMs as much as they can be painful, and sometimes there's people in the AGMs that aren't as, you know, friendly as other people, but an AGM can be quite vibrant, if you like. But I mean, you've got to go there to know where the building is at and what's going on in the building, so therefore you know when special levies are coming. You know, repairs and maintenance and basically maintaining the property. I mean, lots of properties are on the market, and as Charles was saying, you know, the vacancy rate isn't that high, but if you want to have a competitive edge against someone else's property, maintaining the property, make sure it's always up to date with new kitchens, new bathrooms, built-ins, all those kind of things are really important. And so budgeting for that and making sure you save money for that are really important as well.
Yeah, and a lot of people think that the strata is a bad thing, but effectively you're looking after your building. Yep. If you've got $1 million investment, you need to spend some money on it.
You want to have a good strata, but there are stratas that aren't so great. I mean, I would really, I feel for real estate practitioners that take on strata. Some of them do. It's hard work. You're dealing for a flat fee as a real estate agent, and often it really is ungratifying.
Yeah, a few $1,000s, it's one of those jobs you just don't want to do.
Yeah.
Definitely. Anyway, thanks for joining us, Charles.
Thanks, Chris.
Now, coming up, we'll talk about capital gains taxes on property sales. And a reminder, you can always get a free digital copy of my book, The Effortless Empire. Just go to yourempire.com.au. Now, we're going to take a short break, but we'll be back soon.
You're watching Sky News Real Estate. Smart investing.